Most traders think the goal is to win more. That belief quietly destroys accounts. The real objective in trading is not performance. It is survival, long enough for performance to matter. And that distinction, as obvious as it sounds, is almost never actually practiced. In the next 10 minutes, I am going to show you the exact math and psychology that proves why protecting your capital beats chasing profits every single time. Let me show you the mathematics that most trading educators never talk about. If your account loses 50%, you need a 100% gain just to get back to zero, not to profit, to break even. If your account loses 25%, you need a 33% gain just to recover. If your account loses 10%, you need only an 11% gain to recover. The smaller the loss, the easier the recovery. The larger the loss, the harder it becomes to ever come back. This is not motivation. This is pure mathematics. And it means one thing very clearly. Every dollar you do not lose. Here is the first mistake traders make during drawdowns. They treat them like emergencies. A drawdown is not an emergency. A drawdown is a normal part of every trading business. Every professional trader has drawdown periods. Every successful hedge fund has drawdown periods. The question is not, how do I avoid drawdowns? The question is, how do I behave correctly during drawdowns? And the answer is the opposite of what most traders do. Most traders during a drawdown increase their position size to recover faster. They take trades outside their system because they are desperate. They change their strategy because they think it is broken. Professional traders do the exact opposite. They reduce position size. They tighten their routine. They protect emotional capital. And they wait. Because they know one thing most traders know. Here is something nobody tells you about capital preservation. Capital is not just money. Capital is financial. Capital is cognitive. You can destroy a trading account without ever blowing it financially. You do it by overtrading, by seeking validation from the market every day, by making decisions from exhaustion instead of clarity. I have seen traders with profitable systems destroy themselves emotionally because they could not stop trading, even when they were ahead. They were not blowing money. They were wearing themselves down. And that emotional depletion leads to the bad decisions that eventually do blow the account. Preserving emotional capital means knowing when to stop. Not just when you hit your loss limit, but when you hit your mental limit. Your best trading happens when you are fresh, not when you are desperate. Let me tell you about Daniel. Daniel had been trading for 3 years when he blew a $50,000 account. Not in one trade, over 4 months. It started with a drawdown. Normal drawdown. 8% down.
But Daniel treated it like an emergency. He doubled his position size to recover faster. Lost more. Doubled again. Lost more. Changed his strategy 3 times in 2 months. Each change made things worse. By month 4, Daniel had $3,200 left from a $50,000 account. He had not blown his account in one dramatic moment. He had ground it down, trade by trade. Panic decision.
3 capital preservation rules that professional traders never break. Rule 1. Never risk more than 1% of your account on any single trade. Not 2, not 5. 1%. This rule alone eliminates the possibility of a drawdown turning into a disaster. 5 losses in a row at 1% leaves you with 95% of your capital. 5 losses in a row at 20% leaves you with 32%. Same 5 losses, completely different outcomes. Rule 2. During a drawdown, reduce your position size, not increase it. When you are down 5%, drop to 0.5% risk per trade. When you recover, go back to 1%. This feels wrong. It feels like giving up. It is the most professional thing you will ever do. It keeps you in the game long enough to recover. Rule 3. Set a daily loss limit and treat it as non-negotiable. When you hit it, stop. No discussion. No, just one more. Stop. Protecting your capital today means you show up tomorrow. And showing up tomorrow is the only way the edge ever works. The most important trading skill is not finding the right strategy. It is not reading charts. It is not timing the market. It is showing up tomorrow with capital to trade. Every day you protect your account, you give your edge one more day to work. Every day you blow past your loss limit, you steal one more day from your future self. Preserve the capital. Protect the account. Show up tomorrow. That is the entire game. Drop a comment below. What is your current daily loss limit? If you do not have one, set it right now and write it below. I read every single comment. And if this video changed how you think about protecting your capital, hit subscribe and the bell icon so you never miss a video like this. I will see you in the next one.